This is Ira Harris is joining us today. It's what is it? It's July 19th, and I think this is I don't know which one this is. Or it's our 19th or 20th session.
Really?
Yeah.
Well,
I was just looking for what Jack sent me. Here, what? Yeah, this is our 20th session.
well, wow.
Yeah. And we made a lot of money on all your calls, so it's a cool thing.
Yes, we have.
Okay. All right.
Yes, we have.
All right. Pass the hat and give me some ammunition. All right. We got any questions? Yeah. You know what? Well, again, we talk about. It's about ferreting out the best. And if it's not the best idea, maybe we'll learn something from why it's not. And what did I read? This is actually a great quote. This is a great. I read this morning. Hold on. Hello. Okay, I read this morning from one of the smartest rabbis that I know, and he talked about when you have students and teachers, and there was a very famous, well-known, well-learned rabbi who, and he studied under a guy, and then he left very abruptly. He left from studying with him because a lot of times you study one-on-one. That's how the high-level learners of Torah learn, of the Bible learn. So when they asked him, well, why'd you leave? And he said, I couldn't be with a guy. I don't need a master who kisses me. I need a master who will make my bones tremble. And you know what? That's what if we have good discussions in this room, that's what happens. That ideas are forced out, and if they can't stand on their own, they're not worth anything. It's like people say, I don't come for validation. I don't write the blog to be validated. I don't care. People say, well, I said, good, disagree. As you can see the comments that flow through. You know what? And if you would have followed the comments, forget about what I wrote. But over the last 3 or 4 months, for those who read the blog, the comments from certain people have been so right on target. And again, it was ferreting out really good trading concepts. It didn't give us the exact time of them, but it certainly gave you the tools to be cognizant of what the landscape was and, what potential profitability was. And that's what's important. Everything else, you know what? Again, get a dog. As they say, you want to be loved? Get a dog. They'll give you unconditional love, except you have to feed them. So it's not totally unconditional, but they get it. So thank you. But it's a group effort because again, as I keep stressing, anybody, it's like when I go on Santelli or I'm on with Anthony, you're only as good as the person who's talking to you. Because if they don't understand, then they're asking you what somebody's, and it's just fluff. Get to the bones of it. Get to the bones and figure out, does that really make sense? It's like, Santelli did a really good interview yesterday with a guy who I didn't used to like, but I've come to like. I like his wife much more, Vince Reinhardt. That was a really good interview Santelli did with him. Santelli disagreed with him, and I disagreed with Santelli, and I texted him afterwards. I said, I think Vince was absolutely right because he called for a 50 basis point cut at the next meeting just to get it done with and say, hey, okay, we're done for a while. And I believe that that's the right way to go. Get it done. And Vince Reinhardt, he was the 11, 12, probably 12 years ago, 13 years ago, was the chief economist for the New York Fed. So he has real credentials, and he is. I've actually talked to him. He's a very bright guy. He's learning more about markets. I think a lot of these people who work at the Fed, they understand models and the academic aspect of it, but they really don't understand markets. And I think when a lot of them get out, then they begin to understand markets. And the problem is, and it's one of my continual criticisms of the Fed is they don't respect markets enough, and that's where they fall. And that prevents them from being really good at what they do. That's my opinion. But if they would respect markets more and allow them to work, it's when you don't allow markets to work, there's a certain disrespect to it. And Powell, I think, was really doing a good job when he was willing to accept what the markets, but now he's scared of them, and he's in that, and that's what academics are, scared of markets. Jay Powell should let the markets work, and they'll tell you things. Don't be afraid of them.
Well, that's what we were talking about the other day, and then you had all those Fed comments yesterday, and it's like they were afraid of a 50-point break in the S&Ps. It was incredible.
Rick talked about that the other day. Rick had a really good segment on the Santelli exchange, and I happen to I don't know why, but I got up and oftentimes when Rick is speaking, I'll get up and turn the sound up, and I ended up taping that segment because it was very good, and I haven't gone over to listen to it, but I'm very glad to, and that's when he gave a really passionate plea to not start cutting and heading into negative territory.
I know. And you know what? It's funny that we're talking about that because Rick and I have argued about this. I say, go big now. Go big. And he says, no. But and I made him a bet yesterday. I said, we'll never see negative rates in the United States. I'm going to say that. We'll never, because it just, unless we stop being the reserve currency. When you're the reserve currency, it takes on a whole different perspective, and that's my point. And if people don't speak to that, I think they're being disingenuous. When you have that responsibility and obligation of being a reserve currency, and as two very highly acclaimed economists, one calls it an exorbitant privilege, and one calls it an exorbitant burden, and they're both right. And they're both right. But I think as a reserve currency of the world, if you went to negative rates, you would unleash forces that, well, maybe we're going there because maybe that's what the metals have all of a sudden woken up. Well, my view. It's not inflation. When I listen to these people on television, the metals are doing this because of inflation. I think what's front and center to us is that it's now obvious that the central banks of the world have lost control, meaning people are starting to be skeptical that they know that they have a legitimate exit strategy, and that they know how to craft it. I think that's what's going on in the world.
Let me ask you just a follow-up question to that. So, if they cut 50 basis points, won't that kind of we're taking into inflation? So that's not my. With inflation, I think that will be negative rates. But the question, no, we've had that historically. There's nothing new to that. I'm talking about nominal rates. Yeah, nominal rates. All right. So then the question that I would ask about about what specifically, and this is what I think is getting lost or more obscured in geopolitical and geoeconomic macro policies, is what defines the U.S. dollar as the world's reserve currency anymore. So many countries are getting away from using the dollar and using gold or oil or all kinds of different.
They're not yet. There's a lot of discussion, but not a lot of movement, because the dollar still makes up, 66% of all global transactions. It might be higher.
Right. So that's all right. So that's, I was going to say 60%. All right. So if it's 66%, at what point do we start saying that the world is that the USD isn't the world's reserve currency, or does that not happen?
We're not close to that. Unless there's basically an earthquake, a violent, and I'm just not seeing it.
Okay.
Ira, I agree with you. We're not even close to that. Right?
I don't know what it is. I'm not saying
Yeah.
that we are. I just don't know what it is.
Well, there's some factors, right? There's some factors that are important to consider in order to be a reserve currency, right? Your currency needs to be exchangeable and it needs to float.
Right.
You need to have deep and liquid financial markets.
Right.
You need to have a sizable economy, right? And there's some other factors as well, but those are probably the most important.
I don't mean our reserve currency. I mean the reserve currency.
Well, Angelo is 100% right, but you have to be a legitimate store of value. Okay, and which makes you then a worthwhile medium of exchange. Because if I'm sitting in Cambodia and I'm selling shirts to the tourists coming aboard, and they're paying me in dollars, I'm only accepting those dollars if I deem them to be a worthwhile store of value. But if they're going to lose value 10% over the next 2 weeks, they're not worth it. You know what? Now all my work has gone up in smoke, and I've made nothing. So you have to be deemed to be a store of value that I can depend on. That's what any currency.
That's the key. Yes.
Yeah, Ira, I've read that the Japanese yen could potentially be one,
right?
But that the Japanese don't want it to be. Is that
no? A lot of countries don't want it. The Chinese because with it becomes that you start to lose control over your financial system, which the United States has done. In some regard, that's why the Fed has to answer. And I thought Clarida's speech and comments yesterday, coupled with John Williams. Now it's an amazing thing. It's an amazing thing that a New York Fed president had to have their PR department walk back his comments.
Yeah,
that was pretty funny.
That was.
It's an amazing thing. We've come a long way. Yeah, they're walking back his comments because the market reaction was too violent. But honestly, he didn't say anything I'm talking about Tuesday because this discussion took place in real time about Powell's speech in Paris, right?
Yep.
I don't need, we discussed that in real time, and that's all that they spoke to. They only lent greater credibility to what Powell said. And these are his two key lieutenants, by the way. John Williams, which is why John Williams was made the president of the New York Fed. And Richard Clarida has been out speaking to this issue for 4 or 5 months. And I've noted it in my blog for 4 or 5 months that he was speaking to the international implications and was defending why Powell pivoted. And he was bringing into the discussion basically international headwinds. So this is not new. They just supported it yesterday, but I guess they went a little bit too far for everybody's comfort.
Ira, in response to Trump's tweet, not in response, but Trump's tweet this morning, right? I read it, and basically what he was saying was, well, everybody else has lower rates, so we should have lower rates too. And I took a step back and I said, wait a minute. Is anybody stopping to think for a minute why Europe and Japan have negative rates, right? And why we don't need them? Has anyone stopped to consider what the current condition of those economies are versus ours? Right? To say, hey, look, we don't need zero rates. Maybe they do, but we don't. Just because they do doesn't mean we should.
And Ira, this is Brian, to dovetail on that. If we don't go to negative interest rates, and Trump wants to weaponize the dollar, which everyone knows is readily apparent. How do we know, or what's the indication that from a market perspective, the dollar will actually strengthen as it's one of the sole sources in the world for kind of a flight to quality?
You know, Brian, that is a great question. In fact, I would make it in the way that I analyze markets, the penultimate question, which is why I think you're seeing some of the movement now in the metals, just for that answer, because with Trump, the market does not trust that the U.S. will allow the dollar to become and I'm stressing this word, the mega store of value. Because if you look around the world, it has every reason to be so, because Europe, you know what? I don't believe a word that comes out of Europe. And in fact, there's a story this morning on, this site I'm trying to, oh, here, I still have it up, on Reuters. Now, again, as I've said in this room many times, I believe that Reuters is the leak source for the European insiders. When they want to affect the market, they go to Reuters. So there's a story this morning, ECB plans to restart government bond purchases by November. And Reuters is attributing the story to Der Spiegel, the German high-quality magazine. But I think it's nonsense. First of all, Draghi's term expires October 31st. So I'm not buying this, although it's on Reuters, so I have to pay attention to it. But it's kind of nonsense. Do I think they're going to restart purchases? I don't. I would be skeptical. They have to be nervous about Trump, because if Trump wants a lower dollar, he wants to punish Europe, significantly punish Europe. By the way, he likes seeing Germany slow down here. Make no mistake about that. He's enjoying it. Again, because he has it out for Merkel and Macron. He's not done with them yet. They played a bad card at that one G7 conference when they tried to embarrass him. They did embarrass him. And here's a guy we know doesn't forget easily. So he's got some things to contemplate in Europe, and the Europeans have played this game. And to say, you know what, if you think that they're not doing this to keep their currency weak, that doesn't mean that you're quote unquote intervening, but you're certainly using your financial policy to manipulate the currency. And they do it certainly with the intention to keep their currency weaker. I don't have to, that's not an opinion. I read the releases from the Swiss National Bank. The European Central Bank doesn't talk about it in their actual statement, but if you listen to Draghi's press conference, it bears on them. The Australians do it. The New Zealanders do it. The Japanese talk about the currency value. The Canadians talk about the currency value. There's enough of them out there. So whether you're directly intervening or not is inconsequential. You're setting your monetary policy, and it's the ugly game of this inflation target. It's just an ugly game. So you can play this game all you want. I set some target. I find it so that it lacks so much credibility. But again, it doesn't matter what I think. These are the cards we're dealt with. We have to work with. We have to work in that environment. Again, I'm looking here at my latest sheet. Belgium 10-year debt, -3 basis points. France is -7. Finland is -9. Austria is -11. Japan is -13. Netherlands is -20. Denmark, these are all Germany's -32. Come on, you know what? Come on, it's so preposterous. And don't tell me that it's the market doing it. It's because the central banks take so much out of that they effectively, as I say, contain the market rather than allowing the market to work. And it forces the U.S. And these guys admitted it. This is what they're looking at. Again, let's go back to Tuesday's real-time conversation about Powell's speech. You're admitting what's going on in the world, and now you're adjusting to it. So, Brian, I don't think, and that's why, you know, I've been, my whole play for the last 4 months, 5 months, 6 months, 3 years is the long gold and short the currency. It's a hard thing to time all the time. You get whipped around with one headline or another. But that's because, you know, to me, the precious metals, I'm not a gold bug in no way, shape, or form. I have, my grandchildren just left. I look at them. Do you think I want gold going up? Because gold signifies that something's wrong in the system.
Excellent point.
I'm not. But let me turn the question back on anybody who would say, "Oh, you're a gold bug," like when Steve Leisman, "You're a gold," you know, somebody's a gold bug. Are you a fiat currency bug? Or to quote Jimmy Grant, are you enamored being on the PhD standard where academics are, by their models, setting the value of interest rates and currency values? Are you? Come on. If you're gonna play with me, I'm gonna play with you. Let's play. Answer me that question.
I gotta believe for you. I gotta believe that for you, those sorts of knee-jerk responses get frustrating beyond a certain point.
Oh my God! Oh my! Every time Leisman says it, and he says it with such disdain, like when he wants to attack Judy Shelton, gold bug. That's not. They don't even know. It's just. It's a pejorative statement. So you get to attack somebody on a very pejorative basis. But I'll turn around and say, I'm not a fiat currency bug. Why? Because unlike Warren Mosler and Stephanie Kelton, I don't believe in the collective wisdom of those who sit and make government policy. As a matter of fact, that's why gold is at $1,430, because they've proven that they're not to be trusted. That they're, you know what? I just don't see it. I just don't see it. What has anybody done that I should believe in their infinite, that they have infinite wisdom, that they're philosopher kings who know everything? I know George Soros thinks that he's the philosopher king, and I don't say that lightly, but I really truly believe that, and I've read enough of his stuff over the years. As I've read the guy who he mimics about everything, Karl Popper, and the Open Society, who was his professor way back when. So he believes that he knows better than everyone. I just haven't seen anybody I would turn to say that to. And you know what? Everything that I see around me says that I should be that much more skeptical. And I'm not the only one. The world is becoming more skeptical.
So Ira, I want to go back to Brian's comment and also your response to it, and then just take it one step further with the dollar. Okay. When global growth is in sync, right, the dollar becomes a funding currency with which the proceeds get used to buy emerging market assets, currencies, bonds, stocks, you name it. Right. When the reverse happens and you have global divergence, right, then that's when the U.S. dollar strengthens. So I know Judd doesn't like the dollar index, but I keep an eye on it as a, I don't know, canary in the coal mine, if you will, in order to keep an eye on, you know, what global growth may be doing. You know, if the dollar index begins to top, you know, that's probably a signal that global growth might be bottoming, you know, that sort of thing. So while Trump may, you know, jawbone the dollar and try to get it lower, I think fundamentally, right, there's much stronger underpinnings with regard to what global growth is doing, whether it's in sync to the upside or in sync to the downside. Would you agree with that?
Yeah, that's a very good point. And Judd, I'll agree with him because I'm not enamored with the dollar index. I do watch it and I do look at the technicals on it, but I'm an IMM guy. And I appreciate the roles of the individual currencies because you know what, it's a weighted, and I'm not wild about the weight anyway, so it can throw you off. But I do watch it because I know a lot of people watch it. So if you're watching it, I want to know what you're watching, and I pay attention to it. Now, let's talk about the idea of a funding currency. In foreign exchange, when your currency has low interest rates, and I'm going to go into the theoretical world here. Let's say everybody's currencies had a 2% interest rate, okay? The euro, the yen, the US dollar, okay? Everybody at 2%. Now, you're looking to fund some investment, whether you're doing bonds, you're doing, some interest, but you're doing some funding. You're a corporation borrowing. So all interest rates are 2%. And if you had a corporate treasurer, with the way they would make a decision, and if they were smart, they'd call Ira Harris and ask for some advice, and say, on an all equal basis, going out the next 5 years, all interest rates are the same, and I don't want to hedge, but I want to borrow in a currency that I think I'll be able to pay back cheaper. So that's what I would look to do, because that's the idea of a funding currency. When the yen was going down, people were borrowing massive amounts of yen because interest rates were the lowest by far, and the currency looked like it was absolutely cratering. So people were busy. They were doing their funding in yen because that's what's called the perfect carry trade. That's perfect carry trade. If I can borrow at low rates and believe that the currency is going lower, wow, you know what? That's where I'm borrowing. That was working very well if we go back to January of 2015 for the Swiss franc. The Swiss franc was a massive funding currency for homeowners in Eastern Europe, believe it or not, which is why the Swiss central bank was holding that peg. But when they couldn't hold the peg anymore at 120, and they pulled that peg on January 15th, 2015, those people in Eastern Europe got slaughtered because now all of a sudden they had to pay back Swiss that were much more expensive because nobody hedged themselves. Because why? Because in hedging yourself, then there wasn't really that great of an advantage. You were paying so much away on the hedge. And they said, well, they're holding the peg. So that blowing apart the peg killed people. That's why you saw those massive moves for a week. Killed people because people were totally caught off because they bought into what the Swiss National Bank said. So the idea of a funding currency is exactly that, which I'm giving you the long answer to what. So when the dollar is a funding currency, people perceive that in an X amount of time it will be lower, and its interest rates are probably lower than everybody else. Now, for a long time, the yen flew in the face of that because the yen had super low interest rates, but the yen was appreciating because the Japanese, and this is the tricky part about foreign exchange, because the Japanese have so much capital invested around the world, and when they get nervous, and that's when you hear, that people are talking about, oh, the yen's rallying because of a safe haven. That means that the Japanese are bringing money home, and they have so much money invested all over the world, and that puts a bid into the yen. That's what you see because there's a repatriation of money back to Japan. So for a lot of years, especially during the crisis years of 2008 to 2011, especially 2012, if you funded in the yen, you got killed. You got killed. Go look at a yen chart. You'll see it. So you always have to be careful when you discuss that because there's so many variables that go into it. That's what makes currency trading so difficult. So much so that Alan Greenspan said, he famously said, I have no idea. To me, he says foreign currency trading is like, I'm better off flipping a coin because there are so many variables. But as traders and analysts, we have to be very, view this through very dynamic eyes. If you, again, as I always warn, if you're using static models, you're dead meat. You're dead meat.
And Ira, this is a good point that that you're making right now, and this is why you don't throw your old work away if you do work, guys. Because if you go back to 1995, when the yen spiked below 80 and got all the stops one night, and then turned around in reverse, it took what? It took until 2011 to go back there and take out that dollar low, and then they double bottomed in 12, and that's 11 and 12 when you're talking about Ira, when everybody got rinsed the other way back to 125.
You know, Judd, and you bring up a very good point, and because it brings me to January 3rd of 2019, the night of the yen flash crash.
Yeah.
Right?
Right.
Put that chart up. That chart now becomes, to me, I've been all over that chart for the last 2 days. Because that becomes very important because you see the spike, right? Put up what duration chart you putting up?
I got a daily. What night was it? What day was it?
January 3rd.
Oh, hold on. You just got to squeeze this back a little bit. Right there. There it is.
You see the range? The gap opened that night. Yeah, this was that night. This took place at between 4 and 5 when Globex was closed. We started this whole move. But you see, because everybody said it was a fat finger, we're not sure what took place, but they called it a yen flash crash. It was a very dynamic move and led to dynamic moves across the board. But I'm looking at the settlement. I'm on the futures chart right now. Okay, you see?
Hold on. Well, I'm looking at the cash. So I'll put up the futures.
Okay, I'll go to the cash. That's just as good. Okay, hold on. Let me click on that.
Yeah, it's we screw you when nobody's around. That's what that's called.
Well, yeah, but it sustained itself. Believe me, I was short yen that night. I went home short yen for a reason. I had some crosses on, and I wound up doing okay because I was able to sell into it when it opened at 5 o'clock. I said, shit, because I kept looking to see what was going on. But it stayed good. If you put up a 240-minute and scroll back, you'd see it very clearly. But okay, I'm on the cash chart. So we see where it settled at 107.66.5, right, on that bar? You see that on the daily? Okay. Well, that now becomes important for me for a view on the dollar. Because if that was a flash crash and supposedly a one-off, but now we're back under there, it starts to give me some idea. Because, I've said all this week, I was looking for areas to buy currencies. I'm not bullish the dollar because especially since the Powell speech. But the yen is very, very interesting to me because the yen's been going up, even as the stock market's been going up, which is, the old correlation was the stock market's up, the yen would go down because risk on, right?
Right.
So it's not. Now, this hasn't confirmed anything to me yet, but I still watch that January 3rd because if that was a one-off time, it shouldn't mean anything. Yes, the low, and I really believe we will visit the low again at 104.80 just to test the veracity of whatever took place that night. But it's on my radar screen. It's on, and I've actually traded the yen pretty well today. I got hurt because I overstayed my welcome, but it was I told you, Judd, the other day when I had sent you a note looking at the end. And I liked where it held.
And I liked the low, that particular low to see how high it would bounce in the euro.
Yeah.
Judd, you have a level pretty close to where it closed on January 3rd.
Yeah. Those never.
Yeah.
It's amazing.
Yeah. It's not by happenstance, but that's why we go through all this effort. Again, it's like the oil you won the other day. There's a method to this madness, and the madness actually pays at times. I may be the king of hearts, but that's okay. I don't mind being outside the institution. Let me back in the institution.
Ira, were you looking at the yen futures?
I do. I look at
like just a minute ago.
Yeah, I was. Yeah, I was. What are you tapping into my database?
Back up 1 second here. and you were just talking about the oil yuan, and Matt was short. Hamster had all his hamsters short the oil today, and I said, that it was starting to weaken again below the fibs. And so that was just one more confirming thing for him to feel comfortable about his shorts.
Yeah, you know what? And Judd, you know, I text you last night about the beans, or yesterday to watch the beans. First of all, there was the Chinese. There was an article in the FT last night wasn't the FT. I'm sorry. It was on Forex Factory again. I hate to promote them, but they actually had an interesting article that caught my eye. That this was out yesterday afternoon. Where is it? China makes biggest U.S. sorghum purchase since April. This was out 22 hours ago. It was an article from Reuters. So that caught my eye. I said, wait a minute, they're buying sorghum. They're going to be buying grain. It's a very difficult trade, especially because of all the tweets that are meandering around. But today's action, you know, with all this heat, you know, I'm a believer that grain, and I am one. I'm just now I've rolled out of August, and I'm only in the no beans. But you know, Judd, you had that great level, and I used it the other day. I got long at 892, 893. So I'm just sitting there.
Yeah, and it was a really good low off the spreads. Off the bean.
Oh, you sent me the wheat. Beans wheat.
Yeah, and the wheat was at the 200-day, and Arco asked me about it, and I said, yeah, it's positive the beans, and I don't want to really be short the wheat, even though the spread looks like it's supposed to be that way.
Yeah, no, you know what? Now, if we're going to get really into a grain market, the beans have to, especially if those acreage numbers have any validity. If we're into a semi-weather market coupled with some foreign demand, the beans will have to begin to lead here. The corn did its work, the wheat did its work, but if those planting numbers that came out on June 28th have any validity, the beans ought to, and I stress that word ought, because if they don't, then it's not going to happen. Trust me, these are all false starts.
Yeah, the wheat below was good today too. So it's just, and I think I'm with you. I think the beans lead this one.
Yeah, if they're not going to lead this one, I'm going to be highly skeptical. But these, you know, I'm wrong on the yield curve right now because they rolled back those, you know, the walk back by Williams' team at the New York Fed really hurt me last night because I actually put on a fairly sizable 2-5 position. It was started and I had it on really well, and I'd gotten out of it, but I got a little impatient. Had some orders last night that got me filled a little too early. But this is one. Now the Fed is going to make me crazy here because is it a quarter? Is it a half? Is it a quarter? Is it a half? You know, I don't know, but that's why I'm patient, and that's why I'm going to walk very gingerly.
Ira, just going back to the central banks 1 second. I thought to myself, you know, if we had some adults steering the ship here in the U.S., we would just let the Europeans and the Japanese blow up their banks.
Yeah,
and then ours are the last men standing.
Well, that's right, except that you know, Trump is enamored with this dollar. It's not new. He's spoken about this since he's gotten elected. He had meetings about it. You know, that goes back to the meeting when he had all the CEOs of industrial companies when Mark Fields, who was the CEO of Ford at that time, said, you know, came out of the meeting and said, hey, it was in a February meeting of 2017 when he came out, they were interviewed on CNBC, and he said that currency intervention is the mother of all trade barriers. And you know that that's what Trump believes, so it makes it difficult, and Trump is going to keep hammering on it, and Bob Lighthizer, I believe, I argue with some people who think that they know a lot, who say, tell me about Bob Lighthizer, but they've never read anything and they don't even know he was involved in the Plaza Accord. I said, well, then how do you know what you know? I said, Bob Lighthizer is one who understands currency values because he was with Jim Baker through the Plaza Accord. Go read his work. He knows. So, as I say, when a couple, 3 weeks ago, when Trump passed the baton to the Commerce Department with the concept that the Commerce Department, and believe me, a lot of people in government didn't like it, would be able to put on quote unquote countervailing tariffs if the Commerce Department deemed that somebody was playing with their interest rates to lessen the value of their currency. So these are nuances to be watched.
So Ira,
and I'm going to be watching them.
Which method do you think would put more pressure on China? A strong dollar policy or a weak dollar policy?
For China, that's not it. I don't know how to answer that question. A weak dollar policy for China would actually be good because the Chinese corporations who are borrowed up in dollars would be able to cover a lot of that debt load with cheaper dollars.
So then a stronger dollar would put pressure on those Chinese companies borrowing in dollars.
They're already borrowed in dollars. It's the cost of covering them. It's the cost of covering them, which is when things start, when everybody starts to get nervous, when the dollar was rallying too much. Remember, let's go back to December. Everybody, they were worried about the emerging markets having too much dollar exposure with a stronger dollar. So it's, again, because currencies have so many variables that are always in motion, a stronger dollar in a debt-plagued global financial system is not a good thing for the financial system, and ultimately not for U.S. companies. Because if you're having problems paying back your debt load, you're not doing capital expenditures or anything else. So there's less CapEx spending, which isn't good for the multinational corporations. So there's a lot of, again, you ask whenever we talk currencies, these are not easy questions, and we have to turn the orb all kinds of ways to look at it from every angle because there's a lot to digest.
So in the end, it all comes back to the recklessness of central banks with zero and negative rates.
Yeah, absolutely. There's no question about it. And that's why, I maintain, while the mainstream media praises Mario Draghi for 2012 with his whatever it takes comment, I believe that Mario Draghi has done more harm to the global system, not because what was needed in 2012, but that he's extended it beyond any sense of rational policy. And Bernanke paved the road, the highway for him to be able to do that. And he has taken it to an extreme, and he loves it. And he'll say, well, I have to do it because there's no fiscal stimulus coming out of Europe. In fact, while we're on this, Merkel was talking about ramping up German some infrastructure spending to create some stimulus, but not doing it through debt, blah, blah, blah. She must have gotten a great deal of heat coming out of the G7 ministers meeting. So she all of a sudden starts ramping up her language this morning. We'll see. I don't believe it, but we'll see.
Ira, who was in their respective seats first, Draghi or Kuroda?
Oh, that's a good question. I think Draghi, but not by much. Because before Kuroda was Shirakawa, who was actually a very good man. But no, Kuroda may have been there first. I don't know. I don't know. My Japan expert just walked out the door with my grandchildren.
Oh boy.
so I can't turn to them. But yes, well, but why would you deem that to be an important question?
I mean, if Kuroda was there first, I mean, you know, Japan really was the one with negative rates first, I think.
Oh yeah,
versus Draghi. You know, Draghi just, you know, played along.
Yeah, but the Japanese went to 10 basis points negative, and they've never moved. And then they did that yield curve control where they said that they would be buyers of 10-year debt because they wanted to keep that at zero, which I thought was a terrible idea. But the Japanese also do something. You know, they have QQE, which is, you know, qualitative and quantitative easing, because they intervene by buying, you know, REITs. The Bank of Japan has bought a lot of equity because there's no bonds. You know, they own all the bonds.
Hey, Ira, excuse me a second. There's a couple of just things I want you guys to be aware of. I put up now, CMG, all these service names are starting to come off. And a lot of the tech names are all losing their mojo here. I mean, Netflix already blew up. Facebook's losing it. Apple's under duress. They're taking off IBB, UNH. So you're getting a huge rotation. They're going into some of these financial names, but they're taking pretty much a lot of risk off the board and going to this OPEX this afternoon. You know, you're going to see more volatility like you saw this morning in the metals.
Hey, why did KSU rally today? I understood why it went down yesterday. I don't understand why it ran. Well,
the transports were bid pretty much all day. I mean, it's still with FedEx, and and I think CSX got back above or it's 200. Let me look. Well, CSX tried to go back up to its 200-day and failed again.
They announced earnings this morning at 8 o'clock.
Oh, Kansas City Southern?
Yeah.
What did they do?
Earnings.
Oh, they really? So they're
at 8 o'clock this morning.
Yeah.
I didn't see it. You know, I don't know if you follow their fundamentals, Ira, but you know, EPS $1.64.
Yeah.
You know, versus freaking estimates, which I think is always a joke. But sales 714 mil versus estimate of 706. But I hate that stuff because I just want to know, you know, what the frig did they do same period last year?
Yeah. No, it's. You know what? And again, well, you know, what I believe that's a play about. But last night, Ambrose Evans Pritchard had a really good article. It's nothing new. Again, Peter Bookvar has been covering this stuff better than anybody that I read. And I don't need to promote Peter. He's done a great job on his own. But the article, I have it still. If you guys want it, I'll send it to Judd. It's called Grim Freight Figures Signal Recession. So let me see.
Yeah,
Ira, please send it in. I'd love to read that.
Wait, hold on. Let me find it. I had it. Hold on.
And JB Hunt has been rallying since you know, they announced, they popped, then they came back for a back and fill here on the 17th and didn't fill a gap, and it's been one way ever since. It's you know, 10% rally.
Maybe those Confederates like cheaper diesel prices.
That's 3 days, and it's 3 days. It's gone right up to its almost to the bottom of the weekly cloud and the 50-week moving average. So I bet a lot of that's going to be done with today too.
All right, Judd, you're getting it right now. This is a good article. But the freight issue, you know, it's the cash, as we've talked about, following Peter Bookvar, the cash freight index has been phenomenally weak, and it's a continual weakness. There's nothing. So I mean, you have these. It's not. The picture is so muddy. You know, this one talks about how great the economy. This one says, oh, here's this data. So we go all round and round and round, and everybody's got, oh yeah, things are great. You know what? And then you have the Europeans who can't stop talking everything down. Everything.
Ira, when you talk to Bookvar and the rest of your cohorts, do they have an opinion? Do they have an opinion on what mix of QT versus rates? What, do they have an opinion on which they'd rather see first and which they think should be second, or even what's your opinion on that?
You mean a scientific approach?
You know what? A commonsensical approach. How about that?
Oh, that's an interesting statement.
I mean, do you think maybe just leave rates alone and let QT wind off? Something like that?
I hate to put words in people's mouth, but let me tell you this, that Peter and I have agreed this is out. This just came out. Let's see. Bullard doesn't see need to end Fed balance sheet runoff early. Bullard, if Fed cuts rate by, it would be preemptive act. Bullard, so now he's changing his tune, favors lowering rates by 20. You know what? Need to follow through in July. We may, because you know what? These guys all talk to. I feel like, you ever watch The Blacklist?
Yeah. Love it.
With James Spader?
Yeah.
Great show.
He shoots that woman, what's her name? Mr. Kaplan, that he calls her, the old woman who cleans up for him, because he looks at her, he says, you talk too much, and he kills her, and I start laughing. And that's what I feel like. Will somebody please shut these assholes up?
Well, I saw that come out, and the way that I read it was Bullard's little flip there was in response to Williams walking back his original comments. The president applauded Williams' original comments. They walked them back, and Bullard had to walk them back forward in his stead.
I know.
And he'd be willing, and to continue, Bullard says he would be willing to serve as Fed chair in the future.
Oh, wait, no, he did not. Don't. It does.
It does.
Yeah, that's why he made the comments. He flipped so that that's
where did you see that?
Reuters. Fed's Bullard says he would like to cut rates by 25 basis points at the upcoming meeting. Bullard says he would be willing to serve as the Fed chair in the future.
Fed chair is, of course, something I'd love to do. But he says this, too. Would like to see yield curve upward sloping. You seen that? Let's see if it moved the curve. Let's see if he could do something that would actually help me. Put him on the payroll, will you?
Move the bank stocks.
Oh wait,
because you know what, Ira? If they never actually run off the balance sheet, then we end up with de facto monetization of $4 trillion.
Eventually, don't tell anybody.
Eventually, yeah.
Don't tell anybody, and it'll only grow because.
Don't tell anybody.
You could see how fast they panic. They panic. Shit.
Ira, you're going to get your steepener. You're going to get your steepener with quote unquote rising rates on the long end.
That would be ideal.
Trying to do that right now.
Yeah, look, you got a 50-point break in the S&Ps, and these guys wet their pants.
Yeah,
their pants.
Yeah, absolute cowards.
They want to paint this tape, and they need it above 12 to 15 in the S&Ps to take it up, and then they'll get everybody buying it again.
Absolute cowards. Absolute cowards. And that's where Jim Grant's comment about being on the PhD standard is so appropriate. And don't tell me counterfactual. Well, if we didn't do this, no, I'm not. But everything in the world is not a counterfactual. If you don't think that Draghi at all enjoy their power, think again. Because, you know, my default statement will be, what you know is that power corrupts and absolute power corrupts absolutely. And you know what? Through their use of power, they have corrupted the market system.
And here we go.
Ira, did you see the?
Look at the
Ira,
Dow,
did you see?
guys. Look at the Dow. We start getting above 27,800. They are going to run everybody back in a big way. Okay, go ahead, Angelo. Sorry.
Ira, did you see the op-ed piece yesterday in the Journal, written by what is it, Cochran? He's from the he's a senior fellow at the Hoover Institute. It was an op-ed in the Journal yesterday about the gold standard, how it wouldn't apply, but he comes up with a really good framework for an alternative that basically establishes a starting point. Okay. And then that starting point gets used as the mechanism for increasing taxes, lowering taxes in order to maintain like a zero inflation rate.
Yeah, I'll have to read it. Yeah.
It was kind of interesting, but highly technical. You'd love it.
Okay, because don't forget, when you dig into what modern monetary theory suggests, it suggests that, but it doesn't have any type of rule-based reaction. Its fallback is that if inflation was going up and taxes were going up, then the electorate would be wise enough to elect new people and change direction. And trust me, that's what they say is their fallout. Well, you know, my 66 years here on Earth, I have yet to see that anybody in that type of position has acted responsibly enough for me to embark upon that methodology.
Exactly. They can't be trusted to stick to the rules.
Right. Well, it's the same. I have the same, you know, of the supply side. And that's why MMT and the supply side, as my friend Kevin McCarthy was the first to point out, is they have many similarities. They find commonality. And they're both, you know, as Abraham Lincoln might say, they're both predicated on our better angels. That's where I have no, when it comes to finances, I don't know of better angels.
You know, the Keynesians conveniently neglect the part about where Keynes said, when the economy turns and things get better, you restore your firepower.
Exactly.
That's
exactly.
so
okay,
true.
But they forget that part. Yeah,
because Lyndon Johnson and Richard Nixon dispelled everybody of that myth, because Johnson, guns and butter, he says, I can do a war on poverty in order to get the support of the liberal base for the war in Vietnam, and I can spend for Vietnam to get their support for civil rights, and so everybody got something. And then Nixon figured it out by his control of Arthur Burns and the Fed, or I won't say control, but is certainly bullying, coupled with opening up the floodgates. And he famously says in 1971 or 72, we're all Keynesians now, because he began to understand exactly what you just spoke to, that, hey, I could spend all I want going into an election, and don't think that Donald Trump doesn't comprehend this. And a weaker dollar is part of his comprehension. But Nixon devalued the dollar too.
Yeah.
It was the absolute perfect storm for him. Hey, we're all Keynesians now. I got it. Spend away.
And then Ira, what happened shortly thereafter with that combination of guns and butter to inflation? Okay.
You know what? It made my college education worthwhile.
We ended up with Paul Volcker. Not that was a bad thing, but he was what was needed at the time.
Yeah, absolutely, to undo that which was done.
So how many examples do we have to hand these dumbass PhDs? Or is it just, futile?
They're well-meaning, but again, the road to hell is paved with great intentions, and they fall in love with their models. They just do. That's what academics do. They build models and they fall in love with them.
We're doomed.
No, we go through shit. The cycles of life contradict, with the 60 years commodity cycles based on. We're not doomed. Wait, hold on. Maybe we are. Hold on.
Maybe we are.
But that's why we keep pushing at it and prodding it and trying to understand it. Because again, it's not static. This is very dynamic stuff, and it's always in flux because it's going to change again. Not the underlying structure and the malfeasance. That's with us. It'll take real leadership. And Powell was actually exercising pretty good leadership, and that was the fourth quarter of 2018. Because he honestly, I think, wanted to break this vicious cycle. This as Ben Bernanke would, I'm going to use his terminology, this feedback loop. Lower rates, more liquidity, higher stock. And the pain of unwinding it in the last quarter, as you saw in 2018, I think scared him. I don't know what was the real reason for his scare, but he got frightened and therefore ran away from that which he was doing.
Well, Chris Whalen points out the reason, and I've read it elsewhere, and that was the blowing out of credit spreads and the market freezing up for 40 days.
Okay. Well, that's right. And I still say it was, I believe that when Mnuchin, Fredo panicked. I
love
this
that.
guy, an idiot. Fredo. So when Fredo panicked on the last week of December, when he started calling the banks and it got into a news story, what was Fredo panicked about?
Fredo, you broke my heart.
Yeah, you're dead to me now.
Yeah, you're dead to me now.
Yeah. But what was he panicked about? He was panicked about something.
Well, it was, Danielle DiMartino Booth, I think, tells an interesting story that ties into, high yield spreads blowing out and that market freezing. And it was David Rubenstein, right? Powell's former boss, right. Rubenstein tapping him on the shoulder and going, "Hey, dude, the market just froze for 40 days. I don't know if you're aware, but cut the shit."
Yeah. Yeah, well, Druckenmiller's double barrel. It's a danger. It was saying the same thing. Now, if the Fed cuts 50 basis points, okay?
Okay.
And Powell's not in on this, by the way. But if the Fed cuts 50 basis points, let me throw out, and it's a supposition I've made before here, so it's nothing new. Do you get, hold on. Let's see. Hold on. So that's on July 31st. If the Fed cuts 50 basis points, does Trump come to a tariff agreement with the Chinese? Is this what's going on and why we've had this abrupt surrender by Powell? And again, I called a capitulation in Paris. I called it that on Tuesday, and I still stay by it, and I've done 2 blogs about it now. Because is Trump trying to control him through that, going, hey, there's all these international things. You don't understand the slowing economy. I'm going to push this. And you don't want me to push this? Cut the interest rates. So is there a tit for tat quietly going on here?
I think there is. 95%
Well, I don't know.
chance. I think.
That's Mike. I can tell.
Yep, it's me.
Yep. Thank you.
I've
Thank
been
you,
listening.
Mike. Yes. Thank you. So you think that I just throw it out there for discussion. You know, I think that Trump does know that he's manipulating him, but I don't. But wouldn't that be interesting? That's why I throw it out there.
I believe I said this before on the day that Trump was trying to talk with the Chinese before G20. I said, hey, he might intentionally sabotage this talk to force Powell's hand to cut rates. And then he could play nice with the Chinese again.
Yeah. Yeah, it's a good. I believe that Trump has figured it out that he can manipulate it because he goes, hey, you want me to bring the economy down? So that what when the Fed says that they're taking out insurance, is that what they're taking out insurance against? Because I'll tell you what,
The insurance policy against Trump's.
Against Trump, right? Exactly, right. I know, Mike. I know you absolutely. The last time we went down this road was probably about 2 weeks ago when we started thinking that it's a possibility. But when you saw the Fed's big guns, and I'm talking about Clarida and John Williams, I mean, John Williams said that he believed that the neutral rate was 50 basis points. He said that.
He did.
So
I thought it was a typo.
Yeah, I did too, except when I went searching for it. And he said it.
And the Fed's fund rate's right into support in the August.
Yeah, you know what? And you know what? So they walked that back from John Williams, but I was still kind of impressed that a lot of the assets that rallied fairly significantly, you know, they took back some of their gains. You know, the gold, yes, I understand. But when you look at it on a weekly basis, it's really, no, not so much. Not so much. And considering that you had a lot of good data this week, right?
Yep.
Ira, I just saw another tweet from Trump. I don't know how old it is, but he says, I like Williams's first statement better than I like his second statement.
That's 4 old. That's 4 hours old. That's been out.
4 hours old? Okay.
Yeah,
this is
that was
just
one
like.
Oh my God, I can't believe you guys even watch those.
No, but they come through. You can't help it. I don't.
I turn them on.
Because of my friend Pax, I have a Twitter feed, but I don't feed it, but I read it. I let Pax feed it. I don't have to.
I'm all over it, Ira.
Yeah, I know. I don't have to get my hands dirty.
I saw, you know, that's actually that's the tweet that I was referencing, Angelo, when we were talking about Bullard earlier. When, you know, Trump, I imagine Trump saying, yeah, to Williams' first statement yesterday, and then rolling it back. No, somebody get Bullard on the phone. Yeah. I need somebody else to talk about money for nothing. So stocks rally on a Friday afternoon.
Yeah, and it's a huge stock rotation again. I mean, now it's and here's the trades we've been on today, Ira. We've been on Albemarle.
Yeah, which I love that company. It's been really a weak performer, but
it's just starting to go. The industrials are just starting to pick up. Your bank in New York, this is a beautiful lowdown here.
Yeah.
Fleur.
But somebody must have just said something else because the metals just the gold just rallied $3. So
yeah.
What is
with the breaking news was that ABC confirms that a United Kingdom British tanker was seized by the Iranian Revolutionary Guard in the Persian Gulf.
Oh.
So that's why gold.
Yeah, I'll tell you, don't. In case you ever needed reaffirming, gold is a monetary phenomenon. It reacts. It's been reacting and does react. If you overlay it to Fed comments and everything else, or other central bank comments, it's actually Draghi. If we go back to the Fed meeting was the 18th, 19th. Draghi made those comments from Portugal June 17th, and that really started gold. And then the Fed, with its Davos press conference on June 19th, really elevates it through those tops that we had talked about, the 1370 area. So that wasn't a war. That was all monetary.
Yeah, I mean, I'm not getting involved in this stuff this late in the day. In a lot of stuff, it's up huge. What's going on there? That's up 4.5% right now.
What is?
Boeing.
Oh.
What,
So,
they actually going to fly a plane now or what?
There was some news out earlier on that earlier. I don't know what it was.
Well, they took a $4 million charge.
Is that what it was?
Hey, it's Country Joe and the fish thing in Woodstock. There's plenty of money to be made. It's a war. Go, go, go. Sorry, I am 66.
Ira, I mean, Judd, just for shits and giggles, throw up Lockheed Martin.
Oh, yeah. Well, you saw that article on the F-35 yesterday, right?
Yep.
CNBC ran it. I actually have a friend whose son flies, so he's not flying an F-35, but he sent me the article.
Yeah, it was a good low yesterday, and it's trying to break out above the fibs right now at 358.78. So it needs like another buck higher. If it closes strong, all it needs to do is start.
Hold on a second. Hello.
Yeah.
Yeah, sorry.
Yeah, so that just has to start up on Monday.
Yeah. Okay. Well, you know what? You see the board setting up pretty good. I think for a lot of things, we got the metals this week. I think the dollar. I'm really not committed more. I had a nice short-term trade with the yen this week, but I'm watching it very closely. And I'll tell you what, if I saw Bob Lighthizer become Secretary of Commerce, my first, I'll wait for the market to give me a little direction, but I might want to then get short the dollar because that would be an interesting move.
So, Ira, other than the Fed, okay, other than the Fed, mechanically, right? What can the Commerce Department or Treasury do to affect the dollar?
Mark this down, okay? Because it comes out of Trump. Countervailing tariffs on countries it determines have devalued their currency. That's a new thing that Trump gave to the Commerce Department. That's when I wrote that piece about weaponizing the dollar. Countervailing tariffs. That's all. And believe me, the Treasury was not too happy. Fredo was very unhappy about that.
I mean, hasn't Trump's already threatened India? I mean, Trump has already threatened India, Vietnam, and I don't know who else.
Oh, the Japanese, the Germans. Who else? What else you want?
He's always looking for somebody to punch.
Yeah, oh yeah. You know what? It's good headlines.
The Irish. He's left the Irish, just like in Blazing Saddles. He's left the Irish alone.
Yeah, there's a reason.
Yeah.
Because when he was a kid with a big mouth, they're the only ones who beat the shit out of him on a daily basis. and evidently, it wasn't enough.
That's great.
Well, that's what they used to do to anybody that walked east of LaSalle Street into the Gold Coast. The cops would drop them off in Bridgeport and drive away.
Yeah.
Is that Bridgeport, Connecticut?
No, Bridgeport.
Yeah, Bridgeport, Connecticut.
The neighborhood I was born in.
We're talking about they drop them off at the corner of 35th and Shields.
Yeah, with Cub hat and Cub shirt on.
Yeah.
I just told my wife we're gonna be Cub fans, and she said, "What? Why?" Because there's less hillbillies in that place than there are in Comiskey Park.
You know what? I used to tease Jerry Considine all the time about it. I go, "Are you nuts?" Now the debt markets. So now the gold's breaking. What happened? Somebody must have said, "Oh, rates." Oh no, I was just kidding. Let's see. Somebody just said something.
Yeah,
it's unbelievable.
We're all still short S&Ps. That's good.
Iran seizes UK tanker.
What happened?
Iran seizes UK tanker.
Yeah, but we saw that before, and that made the gold rally. Now the gold just broke. It has to be something with interest rates.
Yeah,
and why Williams did not intend to send signal about larger rate cut in remarks Thursday about triggered market movements.
Who said that?
I'm looking for the sources.
Oh yeah, this is it. Look, everything, the 5s, the 2s are all trying to put ORL days in.
Yeah, right.
Oh yeah,
right.
Here we
Bam!
go. Here we go.
He's walking it back. He's walking it
Of
back.
course, they're just walking it back. Okay, somebody's calling me. All right, I got to jump. See you guys.
Thanks.
Bye.
Great. Thank you, Ira. What are you laughing at?
It's such a contrived joke, the whole board.
It is.
I love it.
Isn't it also triple witching?
Yes.
Yep.
No, well, it's the monthly op X, yeah. Well, I'm just glad I don't have any of that stuff on. All right.
Judd, how does the low in gold look today?